Alright, this is the lesson on state income tax. This is section 2.2. 2.1 was federal income tax, and that's just reading that table. Most of you guys seem to do alright with that, so I will not make a video for section 2.1 on federal income tax. But here's the one for 2.2 on state income tax. And of course, let's start with our video.
New Decon, now 10 times tastier to mice than the lead competitor. Mice love it to death.
Well, let's try this again.
Sir, why did you wait until the last minute to pay your taxes?
Because I'm an idiot. Happy?
Of course, not everyone is an idiot. Some of us took our receipts and pay stubs to our accountants months ago. And at the risk of sounding a little smug,
Oh, help! Does anyone have a calculator?
Myron,
Oh.
Will you look at those morons? I paid my taxes over a year ago.
Dad,
What is it, sweetie? Did you see a scary picture in your picture book?
that was last year's taxes. You have to pay again this year.
No, because you see, I went ahead and year-wise, I was counting forward from the last previous.
Oh! I put the tax forms on top of your to-do pile a month ago.
I have a to-do pile? March, how many kids do we have? Oh, no time to count, I'll just estimate. 9.
Oh, well, you know we don't have...
Shut up. If I don't hear you, it's not illegal. Okay, I need some deductions. Oh, business gas. Here you go. Keep using nuclear power.
Homer, I painted that for you.
Okay, Marge, if anyone asks, you require 24-hour nursing care. Lisa's a clergyman. Maggie has 7 people, and Bart was wounded in Vietnam.
Cool.
Well, if I don't see it, it's not illegal.
Any point of video, please. Each point of video.
Come on, get in there. Drop.
No!
Alright, so just a little funny thing about income tax. Everybody's got to pay it, and it's just something that we have to do as citizens of the United States. This is something cool I found online. After several rounds of tax cuts in recent years, North Dakota has some of the lowest state income tax rates in the country. The top marginal rates now sits at less than 3%. Not everyone pays that, as we know. Lower earners pay lower rates depending on their income tax bracket. So if you don't make as much as somebody else, you're not going to be paying as much income tax. It's all based on a percentage. All right, personal exemptions are withholding allowances. And so this allows for supporting yourself and others in your family. All right, if you're single, you can take out an exemption of $1,500 for just yourself. So you will not pay taxes, income tax on that $1,500. If you're married, you automatically get to take out $3,000, so you're not paying taxes on that. And each dependent, remember dependent is a child, does not include your dog or your cat or your pigs or your horses or whatever else. Each child is $700. $700 for each dependent. Calculations. If we look at what we need to do here, we have 2 steps in order to calculate our state income tax. Number 1, we need to find taxable wages. And so how much can we actually tax of their income? And this is where those personal exemptions come into play. And this is going to show up again and again throughout chapter 2 here. So we need to be able to execute and calculate our personal exemptions correctly. In order to find taxable wages, we take the annual gross pay and subtract off those personal exemptions. One note, on these personal exemptions, say you file single, so that's $1,500, and then say you have a child as well, that's $700. We add those together. 12, carry the 1, $2,200 you can take for personal exemptions. You will not pay tax on that $2,200. Okay, so we can add up several personal exemptions based on our child, based on marriage, whatever. That can get added up to quite a bit of money. That's step number 1. We just have to take that annual gross pay and subtract off personal exemptions. We're going to get to an example on the next slide. Step 2. In order to find the annual tax withheld. So this is your annual state income tax that we're finding right here. Annual state income tax. We take the taxable wages. This is what we found in part 1, right here. This is what we found right above. And we just multiply it by the tax rate. Be careful, we have a percentage that needs to get converted back into a decimal. That needs to get converted back into a decimal. Let's take a look at an example here. Go through our step 1 and our step 2 so we can see how this works. All right. Tony's gross pay is $44,500 per year. The state income tax rate is 3% of the taxable wages. Keyword, taxable wages. That's step number 1. Tony takes a single exemption for himself and 1 personal exemption for a child. Keyword, exemption, exemption. How much is withheld from his gross earnings or gross pay for state income tax? All right, we want to find his taxable wages. We need to take, if we go back a slide here, taxable wages is number 1. Take his annual gross pay, subtract personal exemptions. So, annual gross pay, subtract personal exemptions. Here's his annual gross pay right here, $44,750, and we want to subtract off his personal exemptions. It says he takes a single exemption, so that's $1,500, and 1 personal exemption for a child, so that's a dependent. Add $700, and that's what we did on the example on the last page, and we got $2,200. So now this is his personal exemptions. We can subtract that off to find his taxable wages. And in this case, our taxable wages is going to be $42,550. So I'm going to write this up here. I ran out of room. $42,550. That's step 1. Find those taxable wages. How much can we actually tax him on? All right. Then, let's get to step 2. Finding the annual tax withheld. That's the final goal. That's what we want. Step 1 is in order for us to get to step 2 here. So, annual tax withheld. Let's look at our formula. Down here at the bottom. Annual tax withheld is the taxable wages times the tax rate. So, taxable wages. We just found that in step 1. $42,550. Times the tax rate. Okay, it says 3%. All right, I need to convert 3.00% into a decimal. 0.03. 0.03. His annual tax withheld is going to be $1,276.50. We just found the state income tax for Tony. We had to use what we found in step 1 in order to calculate step 2. It's very important. It's a two-step process. It's a 2-step process. And so this is what you're going to be doing on the assignment, which is page 120, 3 through 21, all of them. Remember, if you have late work, I still need that. That just gets reflected on habits of work, not your actual percentage grade. So get that turned into me. However, you need to be careful on this assignment because each example changes. And what I mean by that is sometimes they're going to be single. Sometimes they're going to be married. Sometimes they're going to have 2 dependents, 3 dependents, 1 dependent, no dependents. That's very important, along with the state income tax rate changing from 2.5% to 4%, whatever it might be. So be careful when multiplying. Oops, I need a when. Be careful when multiplying. That's it for 2.2. Come see me if you have any questions. Otherwise, get that late work turned in and come back and review this for the exam that will be next week.